Ted Gavin, as depressing as it sounds, let's talk bankruptcy trends in 2017. Let's start off with the oil and gas industry. Do you think that the higher prices are going to be able to sustain a lot of these suppliers, or are we going to see more bankruptcies in 2017?
There are going to be more bankruptcies in 2017, but the good news is, as we're on the cusp of a new borrowing base re-estimation and recalculation, a lot of the operators and producers are worried that they're going to lose borrowing capacity. I don't think it's going to be as bad as they think it is. Oil's around $50 a barrel now. 6 months ago, it was around $50 a barrel. A year ago, it was around $50 a barrel. There's not going to be a huge adjustment to collateral base and therefore borrowing base and cash availability for these troubled borrowers. What we will see is, rather than curtailing production, they're going to just drive deeper into debt and wait for the prices to come back up.
All right, let's jump over to retail. We saw some big name retailers go out of business, including Sports Authority, Aeropostale. What's going to happen in the retail sector in 2017?
Well, there's still talk of some of the big retailers circling the drain. Sears is a perennial favorite to talk about retail distress, Claire's, Nine West. I think, though, the party that's really being hurt by these retail bankruptcies are the landlords. Empty space is harder to fill, particularly when you have a net revenue lease and we're coming to the holidays where retailers traditionally see a lot of their income. Those dark spaces mean less rent and more distress.
ITT was to a certain extent pushed out of business by the government. Regulators really had it out for ITT. Can you talk about the for-profit colleges and university space?
It's a complicated space, and when you're living hand-to-mouth based on funding from guaranteed student loans, any interruption in that flow of funds from government loans is going to cause disaster, and that's what happened with ITT, that's what happened with Corinthian, that's what happened with small regional for-profit education providers. Ultimately, the big difference is you don't have states funding for-profit like they do non-profit education providers. And so it all comes down to cash flow. The further they get astray from the government's guidelines, the more risk there is of failure.
And what about the shipping industry? We saw Hanjin, one of the largest shippers in the world. It's a Korean company. They went bankrupt. A lot of their ships were stuck at sea, only now getting to port to dump off the containers for the holiday season. Are we going to see any more shippers go bankrupt?
I think we probably will, and that's probably best for the remaining shippers. Hanjin, I think the chairman of Hanjin said it himself at the first receivership hearing in Korea. They lost a game of chicken in the shipping industry. There's been vast overcapacity in shipping. The prices have been driven lower and lower, and essentially Hanjin was the first one to cry uncle and throw in the towel. This is a good thing for the shipping industry. There's going to be more because there's still way too much capacity in shipping.
All right, and then finally, is there anywhere else where people may be looking or not looking, where you might see a high level of bankruptcies or trouble start to form in 2017, where we might see bankruptcies in 2018?
Oilfield services, the people providing services to the E&P companies, is still going to be a hot area. Manufacturing, as fuel prices start to come back to normal, as oil prices go back up, that's going to be an area to focus on. And frankly, retailers that are dependent on international shipping, now that the market is starting to charge premiums and try to creep back up in price, retailers are seeing higher shipping costs, even though there's still plenty of excess capacity in shipping.
All right, thanks a lot, Ted.
Thank you. Great to be here.
And thank you for watching The Street.